Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Tuesday, July 30th, 2013. Well, a change of trend back to the upside today, and a candle that's made a higher high and a higher low. Previous day's trading we had an inside day where the sellers were finding some downside momentum in net terms with this black body candle. We had the market testing down below the 1687 level for the 5th consecutive trading day today, and once again closing just down below that level. The area between the 1687 level and the top of this highlighted zone around the 1675 level is an area of potentially very strong support, and that's what we're seeing here at the moment, with the market failing to test substantially or close substantially into that level. We have tested substantially into that level down to the 1675 level, but the market is failing to close a fair way into that level, suggesting that this is a very strong zone. This current candle is a spinning top type candle, a candle of indecision, and that's where we have a small bodied candle with a largish shadow on the top and the bottom, and it represents a battle between the buyers and the sellers, and lack of resolution of that battle. We've also seen the market close just below the midpoint level, suggesting that the sellers have once again taken control of this market, but it is only fairly weak control. So this indecision in the market and the lack of strength from the buyers does suggest that there is a possibility of a change of trend back to the downside. But basically, with this market bound between very solid resistance fairly close by up around the 1700 level, and the influence of that is bound to be quite strong because of the strong psychological level and near the all-time high, and the strong support down below extending down to 1675, it's likely that this market may congest for quite some time. In terms of the Fibonacci extension, now that we're in a new first time frame uptrend, we're examining the relationship of that first time frame uptrend to the previous time the market was trending up. And here today we've seen the market rejected from the 61.8% level. We've traded just to there at the high and been rejected from there. The market has failed to close above the 61.8% and above the 30%, and has actually closed just below the 38.2%. So rejection from the 61.8 and 50% and 38.2% is quite important, and with this indecisive candle does suggest that there is potential for a change of trend. In terms of the Fibonacci retracement here, we've also seen the market testing to the 78.6% level today, being rejected from there and failing to close above the 61.8% and the 50%, suggesting a potential for a change of trend back to the downside. In terms of patterns, here we have a potential wedge type pattern, and not much of a prior downtrend leading into it, only a couple of candles and a fairly large congestion area in relation to the trend leading into it, so not quite a perfect pattern, but it is an upwardly angled wedge type pattern, and suggests that there could be a breakout to the downside. These patterns tend to work themselves out as continuation patterns when the angle of the wedge it moves back against the trend, but there could also be a breakout to the upside. Wedges can be patterns in either direction, but the more likely breakout would be to the downside. Now, we don't preempt the market, however, so we don't take a position until we see that breakout. The breakout, and importantly, it has to be actually a close above or below the barrier of the pattern. So the boundaries are drawn here, and if we do see a close down below the boundary, the lower boundary, we could see the market potentially trading down to around that 1675 level roughly. Not much of a target here, but it would be a target around the top of that highlighted yellow zone from the previous discussion. In terms of Ichimoku, a bullish market in the long-term time frame, with the market trading well up above the cloud, and as I've mentioned quite a few times, the market is looking very overextended in that long-term time frame, and we know that the cloud is a dynamic level and is now continuing to move lower below the price action, and suggesting that the disequilibrium in the market is growing even greater. So there is a possibility of the market testing to lower levels. So even though we have indecision in the market, there is a chance of a new downtrend being established in the market, testing perhaps down to the 1675 level, but very, very solid support around that area. In terms of the Kijun Sen, the market's trading up above there and well up above there, so we have a bullish market in the medium-term time frame. Trading a long way away from there, so quite a lot of disequilibrium in the market at the moment, a possibility of the market testing back to that area, but the Kijun Sen is also pointing flat, and very often price action is attracted back towards a flat Kijun Sen, so that's a possibility. So a test down to 1675 wouldn't surprise. The market is trading technically just below the Tenkan Sen for the second consecutive trading day, and it's only just below, so not a lot of confidence in the breakout down below the Tenkan Sen. It has been on fairly weak candles. Technically the market is bearish in the fast term time frame, and that does represent a significant change in sentiment in that short term time frame. But with these indecisive and very weakly bearish candles breaking out to the downside, it doesn't give us a lot of confidence in any substantial move. So with this indecision in the market, it's more likely that we will see a breakout to the downside, but we also could see the trend continue to the upside. So let's look for a potential higher high and higher low if the market does trade up to around those highs. But as I've already mentioned, a stronger possibility, and only just a stronger possibility, of a test to lower levels. But the market should see very, very solid support coming in around the 1675 area.